Welcome to another deep dive. Today we're heading to Malaysia to unpack Islamic home financing.
Sounds complicated.
It can be, but stick with us and we'll break it down.
We'll make sure you walk away feeling like, aha, now I get it.
Okay, so what are we actually looking at today?
Islamic financial institutions and, the challenge they have.
Right, of offering home financing that fits with their faith, but that can also compete.
In the market.
Exactly.
Trying to balance those religious principles with a global system that's not really built on the same values.
Yeah, for sure. So to kick things off, what are the contracts that Islamic banks in Malaysia use for home financing?
So there are a few. Initially, the popular one was Bithman Ajil contracts.
Okay.
Specifically, a type that looks like Bayina. Basically, the bank buys a house and then sells it to you at a higher price.
Okay.
Payable in installments.
Got it.
So like a rent-to-own, but with a religious twist.
So the bank's the middleman, they buy it, then you buy it from them over time.
Exactly. Simple, right?
Yeah, this is pretty straightforward.
Yeah, but the way these contracts were done, they started to resemble conventional mortgages.
Oh, too closely.
Yeah, and that raised concerns about,
If they were really okay
Yeah,
with, the Islamic rules against interest.
exactly.
Okay, so if those contracts are maybe a problem, what other options do they have?
So another way is commodity mirabaha, based on the Tawarik principle.
Okay.
Now this one, it's a bit roundabout,
Yeah?
but it's a way to avoid direct interest by using commodity trading,
Okay.
like as a middle step.
All right, I'm listening. How does that work?
Let's say you need financing for a home. The bank, instead of giving you cash directly, they'll buy a commodity,
Okay.
often crude palm oil.
Okay.
Big in Malaysia.
Yeah.
On a platform called Bursa Souk Al Sila,
Mm-hmm.
and then they sell this to you
Okay.
at a markup.
Uh-huh.
You immediately sell it on to someone else
Okay.
and use that cash to buy your house.
So you're not getting a loan, you're kind of buying a gift certificate for a house almost.
You could say that.
But then you use that to buy the house.
Yeah, you're buying something else first
Okay.
and then using that to buy the house. But it's all,
Within the rules.
Exactly. So it's considered more in line with Islamic principles
Yeah.
because the bank is technically taking ownership
Right.
before selling it on.
Okay, I'm following.
Now, there's another contract,
Yeah.
even more in line with Islamic principles.
Okay, what's that?
Musyarakah Mutanaqisah.
Okay, tell me about that one. The Musyarakah Mutanaqisah contract.
Musyarakah Mutanaqisah, or for short, it's seen as like the ideal contract because it involves genuine risk sharing between the bank and the customer.
Okay,
They jointly purchase the property.
got it.
Bank leases their share to the customer.
Uh-huh.
Customer buys out the bank through monthly payments.
Okay.
So you're co-owners.
Right.
Then eventually you own it all.
Yeah, I see. So it's a true partnership then,
Exactly.
which fits with the Islamic emphasis on fairness and responsibility.
Mm-hmm.
But you said it's the ideal contract.
Right.
Does that mean there are problems using it?
Yeah. It's praised for being compliant,
Okay.
but it's not used that much in Malaysia.
Why is that?
It's tough to set the profit rates in a market that's always fluctuating.
So how do they determine those profit rates?
And how is it different from the interest rates we're used to?
Yeah, great question.
On the surface, they seem pretty similar,
Yeah.
paying for the use of money,
Right.
but the difference is the risk.
Okay.
Interest rates are fixed.
No matter what.
Doesn't matter how well the borrower does.
Right.
Profit rates, though, they're meant to show the actual profit or loss.
Of the venture.
Yeah.
So if the venture does well,
Profit rate might be higher.
if it doesn't.
Lower.
Okay.
See, in Islam, profit has to be tied to the risk you take.
So interest-based systems, where the lender's guaranteed to get their money no matter what.
Yeah, that's seen as a problem.
Yeah.
It doesn't reflect that shared risk.
That should be there
Yeah.
in a financial partnership.
Yeah.
I'm starting to see how these principles really challenge how we normally think about finance.
Yeah.
It's not just about avoiding interest.
It's about a system with different values.
Yeah.
It's about fairness, ethical system, where everyone shares the risks and the rewards.
Okay.
But that's a challenge for these banks.
Yeah, I can imagine.
They have to stay true to their values, but also compete in a market.
Dominated by the conventional system.
Exactly.
Okay. So how do they manage that balancing act?
Well, this leads to a pretty interesting proposal
Okay.
that's gaining some traction.
Yeah.
So instead of pegging profit rates to conventional interest rates,
Mm-hmm.
some experts are saying,
Yeah.
we should use a rental price index as the benchmark.
A rental price index.
Yeah.
Okay, but before we get into that, let's recap for our listeners what we've talked about so far.
Sure.
Different types of contracts Islamic banks in Malaysia use for home financing,
Right.
like by Najil, commodity murabaha,
Yeah.
and Musyarakah Mutanaqisah.
Exactly.
We talked about the big differences between interest rates and profit rates.
And how those differences reflect a whole different approach
A whole different way of looking at things.
to finance. Yeah.
All right, now let's dive into this rental price index and why it could be a game changer.
So let's do it.
You mentioned this rental price index,
Yeah.
or RPI, as a benchmark for Islamic home financing. Can you explain what that is and why it's seen as this solution to some of these challenges we've been talking about?
Sure. So the RPI, basically, it tracks the average rental rates for properties in a certain market.
Okay.
So instead of tying that profit rate in an contract to a fluctuating interest rate, which can be ethically problematic,
Yeah, right.
it would be linked to the rental value of the property.
So you're not looking at what banks are charging in interest. You're looking at what people are actually paying to rent
Exactly.
similar properties.
Yeah.
It's so much more tangible.
Yes.
And I dare say fair
Yeah.
to determine the profit rate.
That's the idea. It creates a link
Yeah.
between the agreement
Yeah.
and the actual value of the asset.
Okay.
And it's more stable.
Then interest rates.
Yeah.
Which can be volatile,
Yeah.
especially when things are uncertain economically.
Exactly.
I can see the appeal there, especially for someone buying a home. You have that predictability,
Right.
that stable payment structure.
Yeah.
You're not as affected by the ups and downs of the market.
But wouldn't that just shift the speculation then?
Okay, so that
From interest rates to rental rates.
that's a valid point.
Yeah.
But rental rates, they tend to be more stable in the short run
Okay.
than interest rates, which react really quickly.
So there might still be some fluctuation, but the RPI could kind of cushion the blow a little bit. Exactly. And in the long run, rental rates, they reflect the actual value of the property and the economic fundamentals of the market.
Okay,
Right.
that makes sense. So if it's in high demand, the rates will be higher, reflecting that, and vice versa.
Exactly.
If the market slows down.
You're tying the financing to something real,
Yeah.
less open to manipulation or speculation.
Okay. Is there any research or evidence to show that this would work? It sounds great in theory, but, I'm always curious about the real world stuff.
Yeah, absolutely. There's some research out of Malaysia that supports using RPI.
Okay.
One study by Rizlan Mode Yusof and colleagues,
Okay.
they found that RPI, it not only provides a stable benchmark, but it's good at reflecting those long-term economic trends.
Better than interest rates.
Better than conventional interest rates.
Okay, so we've got some solid evidence then that this could be a viable alternative.
Yes.
But I have to ask, are there any downsides? Any challenges to using RPI for this? It seems almost too good to be true.
Well, there are always practical things to think about. One challenge, I'd say, is setting up that RPI data. You need accurate data.
On rental rates.
Yeah, for different properties and different places.
So instead of one interest rate from the central bank, each bank would have to collect and analyze all this data themselves.
Pretty much, yeah.
That's a pretty big job.
Yeah, each bank would probably need its own valuation department
Yeah.
just to assess these rental rates for all the different kinds of properties. It's more resource intensive than just using a single interest rate.
Yeah, for sure.
Uh-huh.
What other challenges or roadblocks should we be thinking about?
I think another challenge is
Yeah.
making sure consumers understand it
Wow.
and accept it.
Okay.
People are just used to thinking about,
Interest rates.
home financing in terms of interest rates.
Right.
Switching to RPI, that's a big change.
Right. So you're not just saying here's a new product. You're saying think about it differently.
Exactly. It's a whole new way of thinking about things.
Yeah.
Like homeownership, financing.
It's a big ask.
It is. And it takes education.
Yeah.
You have to teach people about how RPI works.
What are the benefits?
Why it aligns with Islamic principles.
Especially when people are used to those low interest rates.
Exactly.
It might seem more expensive at first.
Yeah, they might hesitate.
Even if it's more stable and fair in the long run.
Yeah.
So communication is key here.
Absolutely.
Being really clear and transparent.
You got to make sure people understand.
Yeah.
Okay, the costs might seem higher at first.
Yeah.
But you're getting stability.
And you're part of a more ethical system.
Yes, exactly.
And that brings us to the bigger picture, I think.
Okay.
Could this RPI idea change finance as a whole? beyond just Islamic home financing? Could it be a new way to think about it altogether?
You've hit on something. I think we're really just at the beginning of a big shift in how we see money and value. RPI challenges a core idea of how conventional finance works,
Yeah.
that interest rates are the only way to figure out the cost of money.
It's like we're looking at a different world where the rules are different. Instead of just trying to make a profit off of interest rates,
Yeah.
we're focusing on real value of real things.
Tangible assets.
I want to hear more about this. This is pretty big. We're not just talking about a niche market here. This could have implications for, like, everyone.
Yeah, it really makes you question the whole system.
So if we step back a bit, what can we learn from Islamic finance that could help us rethink our financial systems as a whole?
Well, one big principle is the focus on real economic activity.
Yeah.
Like I said, in Islamic finance, every transaction needs to be tied to something real, a real asset or a company that produces something.
So no more playing around with those derivatives.
It helps to avoid that kind of risky speculation,
Right.
the kind that's caused so many problems,
Right.
right?
Right. Instead of, making money off of money, we're talking about investing in, I don't know, businesses,
Yeah.
infrastructure, green energy,
Things that actually matter.
stuff that helps people, communities.
Exactly. It's about making finance work for the real world,
Yeah.
not just making money for the sake of making money. And that ties into another big thing, risk sharing.
Right. We talked about that. The lender and the borrower, they both share in the profits and losses.
Yeah, it's about partnership. Everyone has a stake in the success of a project.
Okay. So it's not just the lender making money off of the borrower's struggles.
It's more collaborative.
Much fairer.
And it leads to more responsible lending, too. Lenders are more careful because they're sharing the risk.
They're more likely to work with the borrower to make sure things go well. It's pretty amazing to think about how these ideas could change the way our financial systems work.
Right.
We're not saying just copy everything from Islamic finance.
Right.
But those core values, there's something there.
Yeah, it's about being open to different ideas.
Yeah.
Challenging what we think we know. Maybe if we take the best of both worlds, we can build a system that actually works for everyone.
Yeah, a system that's stable, equitable, and actually focused on creating real value. This has been quite a deep dive. We started with Islamic home financing in Malaysia, and look where we ended up.
It's been a journey.
And for our listeners who want to keep going down this rabbit hole, we've got some resources for you. In the show notes, you'll find links to articles, research, even other deep dives that go into Islamic finance, different economic models, and the whole RPI thing.
It's a whole world to explore. Lots of new ideas out there.
So until next time, keep those questions coming, keep challenging the status quo, and keep diving deep. This concludes our deep dive into the world of Islamic home financing. We hope you found it insightful.